Can you hear me now? What the hell? I don't know why the hell that happened. Sorry about that, you guys. I guess this thing by default turned off my turned off my thing. Yeah, if you could let me know if you hear me, that would be wonderful. Because yeah, that is very odd. I don't know why it wasn't doing that. See what's happening with this too. This is, I don't know why the hell it put me on this dumb thing. Yeah, I don't know what the hell. I'm not sure why it's doing that. But yeah, can y'all let me know if you hear me real quick? Because I'm not sure why damn thing's doing that. Well, I'm not 100% sure why. I'm not sure if y'all could hear me right now. So weird. Oh, that thing is dumb. What the hell? Well, that's kind of lame. What the hell? I don't know. Yo. I don't know why it's not showing up on my end like it's making any sound. Sorry about the technical difficulties, guys. We have news in 15 minutes. Oh, okay, for sure. Yeah, there was some issues earlier. All right. Cool. I don't know. The settings all changed. Like, for no reason. I don't understand. Come on, YouTube. But yeah, all right. So that's good. Can you tell me if you hear this too? Tell me if you hear like the music. And if it's too loud. I spent like 20 minutes checking all the settings and stuff, and it of course changed on its own. It's so weird. But alright, well, since you guys can hear me again, we're basically looking for DXY to go higher, right? We want to see it respect this fair value gap here. The midpoint of this fair value gap, it should hold and go higher. At least from, you know, what we see currently. Nothing has changed in terms of the overall narrative that we've been painting, which is pretty much the market maker buy model. Right here, right? Market maker buy model. We do have this order block here on the daily chart that has acted as a resistance level, and we can pretty much see how that responded pretty much perfectly in terms of looking at the bodies. So this is a permissible downside objective being reached for, which I've been pointing out as well. Price doesn't go in one direction all the time. It's going to hit premium and discount arrays. As it's going higher, specifically, it'll hit premium arrays, and those will be areas that you can anticipate retracements forming. And then eventually they should get sliced right through. And if they don't, then, you know, you could be possibly incorrect. But in this case, this looks beautiful for the fact that price is pretty much just retraced. It has not been very aggressive to the downside. Because we are in a potential second stage distribution phase of the weekly market maker buy model we've been showcasing, right? All the delivery that's performed is inside this weekly market maker buy model, right? So this was a first stage accumulation, second stage accumulation, smart money reversal here at this order block. Respected the midpoint, okay, pulled us to a discount. We have relative equal highs, a consolidation, and then price shifted market structure here as well as here, and then retraced inside the second stage accumulation, and then now has pressed higher, breaking above this high as well, and then breaking straight through the first stage accumulation on this side of the curve, and now we're pulling back into the daily fair value gap and this weekly fair value gap actually as well, inside that assumed second stage distribution, which should give us low resistance qualities, right? It should, but we'll see how that transpires. That is what I'm looking for in the DXY. That's my sentiment. Overall, things wouldn't change unless the bullish PD arrays get broken, like this daily fair value gap, and then it maybe doesn't respect the midpoint of this fair value gap, and then we just start breaking structure to the downside, and then we'd have to see other things change as well. We'd have to see the yields turn around and go bearish. We'd have to see this market go higher, and then that would be further basically showcasing that things could be changing. But in this case, I don't see anything changing just yet, right? But if you're on the 1 minute time frame, you're probably thinking that the indices are bearish now, or you're probably thinking that the DXY is bearish now, right? So you can never lose focus of what the higher time frame is doing, because you will get whipsawed and fooled, right? Well, in this case, right, like I said, we rallied up higher inside this monthly fair value gap. It's basically respected the midpoint of that off this retracement. Price has not broken this order block, also this bearish order block, and we're down below the midpoint of this monthly fair value gap, also breaking through many other levels. We do have this monthly order block that's a bullish order block, but I'm bearish, right, until something changes. And my target is these lows here for this chart, right? It's these lows and this fair value gap. And then that would also go hand in hand with us seeking higher prices to get us potentially up into here. And then that all transpires to the DXY, basically promoting the fact that this should go higher, that this fair value gap should be respected. One other thing that we can do to try to justify this assumption is we can go to the currencies and let's see what the currencies are doing. So we have some highs here, right? What does the euro look like? Okay, we now see an SMT at these highs. Does that make sense? Like you can visually see that. There's now SMT at these highs. We also have an assumed potential bullish DXY. Again, there was SMT at the highs. If we go to the euro, we see that the euro actually hit this fair value gap. But if you go to the GBP, it failed to do so. That is indicating weakness in this asset class. And then not only that, so basically what have we done so far? We've already layered 3 levels: interest rate markets, the actual price action in the DXY, and then intermarket relationships with these other assets that are correlated with the DXY or reverse correlated with the DXY. So we have multiple layers of things being respected. Now you add on the S&T that we just saw, not only at the highs, but we also have it with the fair value gap delivery. Price hasn't even delivered into this fair value gap, but it did deliver it in the euro, right? And I believe we have actually have equal lows here as well. If you take this daily candle and this swing low, or this 3-day candle, and you take this swing low, that's an equal low, right? So there's equal lows down there that could potentially be reached into if it is going to continue to go bearish. We have all these previous days lows, which are all liquidity pools, right? If we go to the 2-day chart, we could get even further details. Go to the daily chart, and we get even further details, right? So there's liquidity here. There's this fair value gap that also hasn't been tapped into. Oh, whoops. It got tapped into a little bit, but it still has some room to go to fill in the rest of it. And it's so Sunday, Monday is consolidation manipulation. Tuesday, Wednesdays generally present the higher low of the week and expansion inside the weekly range. In this case, we have basically retraced for the week so far, and we may be setting up the high of the week. Also having the SMT, also having all these other things we have just talked about that are extremely important on a regular basis. There's things justifying our reasoning as far as why we want to seek lower prices. We have now outlined targets. We have outlined a premium array that it's reached into. Again, we said SMT. We see the DXY, what it's doing to confirm what the indices or any other asset opposed to the DXY should do. And again, there's trust being built already in the fact that our bearish bias could actually come to fruition and be trusted, at least thus far. And nothing changes unless something changes. And if nothing changes, we're going to continue to hold on to the narrative that's derived from this higher time frame. And we have, so just look at, this is from last week, right? Price was really bearish. Price is now retraced bullish after breaking all this structure, basically breaking market structure, bearish seasonal tendency on top of that to add fundamental analysis. And now, if you go from this high to that low, we're basically reaching for a premium. What the hell? Oops. See, we're basically reaching for a premium. And remember, if you're looking to sell, you're looking to sell at a premium array. Well, where's premium? When you outline this swing high, this most recent swing high to most recent swing low. Well, the premium is here at 50%. Did we reach that? Yes. Is there a PD array that's above there in terms of a premium array that could be reasonable to anticipate a drop? Absolutely. There's this fair value gap that's above equilibrium. So that turns it into a premium array, a high probability premium array. Now, in a bearish market, with all the things that we have just layered together in terms of bias, from intermarket relationships to interest rate analysis to SMT being seen between assets that are reverse correlated to the DXY, and just many, many things, seasonality, right? We have obvious targets down below as well. and nothing has changed structurally. So why change your overall perspective? You don't want to be whipsawed. Bias changes day to day in terms of the near term, but the higher time frame and longer term perspective does not change every single day. You'll get a weekly or monthly bias, and that's not going to change every 5 minutes. It's just not. It's going to last a couple days, sometimes a couple weeks, sometimes months when you're deriving it from the higher time frame. That's why ICT says the higher time frame is so critical, because if you're not paying attention there, you're absolutely asking to get whipsawed and thrown around like a rag doll and beat yourself up in all these unnecessary situations mentally, and this takes practice and to trust this, because we're in the markets and we're trying to make money right away and all the time. And that's possible, yes. It's not perfection, of course, but you can be on the right side of the market when you derive your bias and overall context and trust it on the higher time frame for a longer period of time, right? Like if we're in a bull market, price is going higher, there's going to be bearish days to reach down to accumulate more sell side liquidity to pair smart money buys to keep going higher, unless something changes. That could be 3 PD arrays being broken to the downside. That can be, intermarket relationships changing. Maybe there's a fundamental analysis situation that changed. Maybe there's news that came out that was unexpected, right? Maybe there's a quarterly shift taking place, which also has to do with fundamental analysis, right? Maybe there's a number of things, but unless something changes, nothing changes, and you stick to your bias. Even if it's bullish and goes bearish for a little bit, and your bias is bullish, if you cannot participate or figure out the logic to frame a sell in a buy side move, or vice versa, then you need to wait till price gets back into the higher time frame direction. Okay? But framing counter trend ideas has to do with, like I said earlier, a higher time frame premium array being hit in a bullish market. That's going to trigger a possible retracement. If you're bearish, it's going to be a premium array that's going to be hit. If you're bearish, it's going to be a discount array that gets hit to then show a reaction to go higher into a premium array, right? From discount to premium. Buy low, sell high, right? Buy low means you're buying at a discount. Sell high means you're selling at a premium, right? It's the actual context to what that term even means. But yeah, so I hope this stuff has made sense. Hope I was clear enough with, what the importance is with what we're talking about here in terms of bias, trusting your bias, why you shouldn't be changing your bias every 5 minutes, and the considerations in terms of counter trend trading, how you can frame a counter trend idea so you can actually participate if price is going opposed to your actual direction on the higher time frame. Okay, so yeah, again, we are at a premium now. All right, if we switch through here, I can probably delete some of this stuff. If y'all think if the music's too loud, just let me know, and I can turn it off if needed. Okay, just let me know. But yeah, so we have this new week opening gap here as well. Again, this has been really bearish. There's nothing positive going on in the economy for the US dollar. It's all inflated. So, of course, at some point things are going to collapse, unfortunately, for us as Americans. But currently it looks like things are just pumping. Right? They're pumping higher. And remember, Sunday, Monday generally creates manipulation and consolidation. So pretty much if we're bearish, this is what we want to see. Why? Why do we want to see it go against our bias that's overall bearish if we're looking to sell? Well, because we're looking for price to get to a premium. Remember, buy low, sell high. So in this case, we're actually now in position to sell high at a premium array. And this retracement here, like I talked about in the other live stream, which I hope a lot of you guys were able to watch, because I drop non-stop gems when it comes to these things, and you don't want to miss the things that I give because they're powerful, just like what I'm about to explain here. I explained this in the last video where we talked about, or the last live stream where we talked about market maker buy and sell models, and at the application of them from higher time frame to lower time frame, to framework to entry, different scenarios like that. Well, when there's a bearish move like this, and you're anticipating the weekly range to go higher, to go lower, well, this consolidation before it goes higher, that could be looked at as an original consolidation to frame your setup. And then you look for a premium array above price for the manipulation of the weekly range. Like it's power 3, right? So when you're looking at a large range move like this and price retraces back to do a retracement, if you like the market maker buy and sell model frameworks, when you see this type of thing, you should instantly see this is the buy side of the market maker sell model situation, because this is a rally up, right? It went from this low, rallied up, reached for a premium. This premium array here at this premium price level should act as a potential smart money reversal. And again, this could be considered as the buy side of the market maker sell model curve. You have an area where it could reasonably reject and go higher, which is from this fair value gap or order block in here, whichever one you want to use. You go to the different time frames. You can pick which one you like to apply and whatever. It's in the same area, right? So it's a lot of overlapping things when it comes to these concepts. But we basically dropped aggressively, took out sell side, and we hit a discount array to open up on this current week, and then it started retracing higher, right? So that is framework in this bearish market to start getting in line with a potential market maker sell model to continue going lower, because again, like I said earlier, nothing has changed. If nothing changes, nothing changes. Right? So you stick to your bias unless this fair value gap gets blown through, and then none of these are starting to be respected. I mean, it'll be kind of obvious after a while when something's gonna switch gears, right? But yeah, because nothing's changed, my idea of what I see happening, plus the market maker buy model in the DXY, how I'm trusting that, all these things that we've already talked about basically amplify the reason that this market maker sell model framework inside this retracement to this premium array could be high probability, right? And then of course the market maker buy model in this DXY chart, that we're at a second stage distribution, and as ICT has mentioned, the second stage distribution is the one concept that if he had to choose one idea and use that forever, he said this is the one that he would use forever. It's the second stage distribution level inside of the market maker buy or sell model, which is basically the last area where price could retrace before it completes and hits the target of the market maker buy or sell model, because it's quick. It generally promotes low resistance liquidity runs. It's essentially, a lot of times that's what it is. And I'm reasonably anticipating that could be the case. We can get a fast, sudden move to get us up above here with all the news events this week as well. Like we have the news, basically news just came out. So yeah, I hope it makes sense. Again, we also have this DXY pushing higher as well from this fair value gap. It's not only a daily fair value gap, but it's also layered with a weekly fair value gap, which is even more high probability promoting for price to want to go higher. All right. We also have for near-term targets, given this chart, if we don't want to only aim for that high, say we're in the trade trying to reach for some type of liquidity to target, if we get in line with the market move that occurs if it goes higher, we can aim for this high, this previous day's high, right? We can aim for the previous week's high, right? We can aim for this wick, right? The low of the wick, the quarter point of the wick, the midpoint, the 75% of the wick, and then the full portion of the wick. You can target all those things as you're going up. So, and that's all on the way to attacking this high. Since we're bullish in a market maker buy model, that's how you can break down your targeting. And then, you could even get closer with it as well, right? You go to the lower time frames, you can see there's like the previous day's high here, right? So this high can be targeted from this fair value gap. You could be targeting the previous session high, which is the London's high. which was here. It was already taken out though, so it's not really present. We also have the AM session high from yesterday. That can also be a near-term target if price is going to want to rally, which I want to see that happen, right? And then if we look at these lows, we can also kind of see if maybe there was an SMT there on the higher time frame, so that's even more important. So yeah, I'm pretty confident that we should see price respect the fair value gap and go higher. But again, if that changes, then we adjust. But we have so much evidence that should be the case that I'm going to stick to that. Okay? And with that being said, I hope all that makes sense. Let's move on to the indices. Okay? Where's the 3 indices? Let me try to get all 3 of the indices up here. Okay, let's so yeah, we've had a lot of retracements. Okay, everything has basically wanted to retrace. Okay, I don't really see any type of, I guess it's using this low, you could see that price didn't really reach down that far for the S&P and the NASDAQ. But again, this was such a big run lower. I definitely, with DXY going higher and all the other things we talked about, I have no reason at this point not to trust the sells will continue, right? We have, it's kind of like, okay, yeah, from the weekly, it looks a lot more clear. So prices hit a fair value gap here, just like we talked about earlier with the Euro and the GBP, right? We could see how the S&P has actually hit the fair value gap on the weekly, but the NASDAQ has not. And we can also see that the Dow has also hit the fair value gap as well. All of this drop has come off of the SMT that was above here at these highs. Here, from this high to that low, or from this high to that high, and then from this high to that high, right? So there's SMT there that led to this big drop, which we had painted from the start. So again, price rallying up in a bearish market early on in the week, going into Tuesday and Wednesday, that's something you want to see. Because why? That's pairing you to sell high, right, at a premium. So yeah, with that context in mind, we are going to now dig into the indices. Start breaking down things from a little bit lower time frame perspective. So we see our area here. So let's go in there and try to make out what the market maker buy model components could be looking like here. So again, remember, this was our higher time frame fair value gap, the daily fair value gap that price reached into. Okay, so that is the higher time frame array from the low that started the retracement. From that low of the start point of the retracement up into this fair value gap up here, that's pretty much the buy side of the curve in a market maker sell model, if that is what takes place. And that's how you frame out market maker buy and sell models on the higher time frame. You go from a point of where price basically retraced or started to turn around, and then you frame out the PD array that's above you on a higher time frame, daily, 4-hour, weekly chart, whatever. And then you anticipate price running up there for the power of 3 in the weekly range. If it's bearish, we want to see it go up to go down. In that same context, market maker buy models or market maker sell models are the same thing. Price goes up to go down. So not only does power 3 merge with market maker sell models and buy models, in this case the bearish power 3 kind of merges with the logic of a market maker sell model because it goes higher to go lower in both scenarios. They're very similar. It's also extremely effective because now if this does work out, say this low breaks, you now can have deep confidence, especially if DXY continues to go higher, based on what we talked about already, that price for the next couple of days should be in line with going lower, right? If nothing changes, nothing changes, right? You stick to what you're looking at. This logic here helps you stick to the logic and the idea that price is going to go lower, right? It helps you further amplify it besides all the other, all the basic nonsense that most people talk about in terms of bias, higher highs, higher lows, blah, blah, blah. Well, the market maker buy model is extremely effective. It's super helpful in framework, in taking trades, creating a narrative around bias and trusting that. It's just extremely powerful. So again, we're looking for this to be a market maker sell model inside the bearish market that we've identified using all the things that we've discussed: interest rate market, fundamental analysis, the seasonality, risk on, risk off, which is basically the intermarket relationships, and basically everything, right? So again, we don't want to see this daily fair value gap get taken out, right? We want to see that continue to act as support, right? We saw that SMT, like I mentioned, between the fuck? Yo, are we back? Damn, can you hear me? What the hell? I don't know. What the fuck? Why did it do that? Fucking internet. Can you hear me? Yeah, you can. Can you see the chart? Damn. Yo, we are under attack today. Definitely under attack. All right, can you still hear me, brother? Just one more confirmation, because now we're gonna dig in. Okay, we're gonna dig into trying to observe some entries, because this is crazy. I don't know why the hell this thing just like I'm glad that we came back though. I didn't know that it would bring me back. I don't know why the hell this is happening. It's so annoying. But yeah, as long as y'all could hear me, that's amazing. Let me just try to pull things back up. Okay, y'all could still hear me, right? Just make sure one more time, one more check. Testing. Okay. Definitely under attack. I'm assuming that y'all can hear me. So yeah, okay, beautiful. Thank you guys so much for confirming. I don't know why the hell this happens sometimes, but it cuts out. I mean, I sure pay a lot of money for connection. I don't know what the hell the issue is, but yeah. So we could see how DXY is still rallying higher again. So again, now we have a potential scenario that could unfold here. We've actually seen just now a shift in market structure. We've seen a run on stops. Let's check these highs here to see if there's any type of SMT. Now we can see SMT at these highs with DXY going higher. So I definitely am behind a potential setup forming. If you could find the model, the model did show up here. But if you missed that, you could try to consider taking potential order block, right? But if that's not something you're comfortable with, observe how price, with all the things that we've discussed bias wise, observe how the model showed up. If we wouldn't have cut out right now, I would have been able to grab that entry. Like, that was irritating. And mind you, if price does this, it's not too late. There's actually an order block here. If you go up to like one time frame above or a couple time frames above, maybe you'll be able to see an order block of some kind somewhere. We do have an inversion fair value gap here as well. So I mean, that can also be utilized, considering the fact that we are going to most likely continue to see price drop. We also see these consecutive up candles here. If we move up a little bit further, up further, see if we could pull out a potential order block. So there's nothing there. We definitely see a low here, and then price rallied up above, and now prices got down below. So you could potentially consider that as an area of resistance. Let's go check out the NASDAQ. See if there's anything reasonable. So because the NASDAQ had made the higher high, the better sell is going to be in the idea that, or the asset that basically couldn't create the higher high, because that's signifying further weakness versus the other assets. All right, so if we go down and look for potential inversion fair value gaps now to try to get in line with something potentially. Okay, we got this wick here, and we have this wick. They overlap. You take the midpoint of that. That's an implied fair value gap. So this whole zone here, from this candle, this low of this candle, all the way up to the high of this candle, should be decent to hold price for us to go lower. But yeah, I gave you all the bias, right? We were in line with the bias. I made sure yet again, multiple streams in a row, that bias has been made aware, or like put in your guys' mind, why the bias is to be trusted, not just I think it's going to go higher or lower. I basically broke down exactly why it should do this or shouldn't do this or that, and we've now seen it basically confirm that bias, which was bullish DXY, bearish indices. Right? I said market maker buy model, market maker sell model is in play from this daily fair value gap that we retraced from the lows to, creating the buy side of the curve. Now price is kicking into the smart money reversal phase, and the market maker sell model sell side of the curve inside the bearish market. Okay, so I'm sticking to that unless something changes, unless price blasts through the highs for whatever reason, unless this drops and breaks through this fair value gap. Those would be things that would trigger me to pump the brakes and not even look for an entry. So again, because we have a framework of a market maker sell model here, we actually can not worry about the fact that we missed this upper move. We can wait for price to continue to build out the market maker sell model, sell side of the curve. Okay, so let's try to go ahead and do that. So we got pretty much accumulation in this area here. So getting below this, this area should be used as resistance. We also have this as a potential accumulation, maybe second stage potentially. And then from this area, if all stays in alignment, we should see price use that area as resistance as well, and then quickly try to get us down below these lows. Right? In a perfect world, that's what we want to see happen. Again, there's so many things that we've discussed about bias, and for it to come to fruition again, right? It's already been multiple. Every time that I've been on live stream, it's done exactly what we've wanted to see it do. Okay, so I hope you're paying attention to why I'm coming to these specific decisions in terms of direction. Like it's been the ideas that I've called out as well. and the ones that I call out in the future, I hope you don't just look at it as he's giving me signals, so let me become a junkie, because that's not at all my intention or goal. I want you guys to learn, right? I want you to learn and then be able to be an effective trader, right? So again, if we can get down below this below this little box here, which is the one of the accumulation phases inside the market maker sell model we're framing out, that would be amazing. You could even take this consolidation here. This whole idea here is a market maker sell model, right? Consolidation, accumulation, reaccumulation, smart money reversal. We're now at a second stage distribution area, so this should quickly get us down below this low, right? So let's monitor that and observe how that could be the case. And if that's the case, oh man, that's just market maker 101 showing you, hey, this specific aspect of things is worth studying, right? It is before the New York open price, so we still could be in for a ride in terms of manipulation. And also, we're not even inside the silver bullet. We did have news at 5:30 Pacific Standard Time, 8:30 Eastern, which was like 20 minutes ago. But and then it also delivered a move, right? It delivered this. Remember what I said? You could have entered at this order block here, and this pullback into that was the opportunity to catch that and get in line with that as well. So missing that wasn't even an issue, right? So yeah, and then again, we got this, we got inversion fair value gaps we got to pay attention to. We got this one too. I think this one's going to be pretty important as well. I think, yeah, that one should be pretty decent. So yeah, if we're going to continue being bearish, ideas that promote us trusting the bearishness is going to be things like this holding, price retracing into it, tapping into it, and then continuing to drop lower. All right, again, whether you are comfortable getting into that type of entry or not is completely up to you. I'm not saying it's right. I'm not saying it's wrong. But that's a validation that we would like to see, is that holding, right? And then price would end up going lower, continuing to use upper premium arrays to resist price, and then continue to go lower. Okay, so let's look at some further context that could have been used for this sell. So this retraced all the way back to this order block as well. So we've came off of this order block, which was in line with this daily fair value gap. So that's also further amplification, so we could trust even more. We also have this inversion fair value gap here as well, which is pretty tasty in my opinion. Yeah, you could see how it's retraced back into that and respected it so far. So in terms of getting back in line, if you miss a move, you can either attempt to take PD arrays like this, like when an order block forms or fair value gap forms, pretty close to where your entry was at. Or if it's down here, for instance, you're going to want to see the rules of your model perform again. So in terms of the YouTube model, to keep things extremely basic and helpful. One second. Let me mark this off real quick. Where is the... So yeah, to keep things extremely basic, let's use the YouTube model, for instance. And every model has a continuation variation. Okay, so in this case, if you wanted to catch the YouTube model, you'd have to wait for this swing high or something like this swing high to be taken, a swing low form, and then it breaks through that swing low, and then you basically would enter into the YouTube model based on the exact rules that you already understand. Okay, like I'll give you an example of what that looks like. Where the hell is the thing? Or here. Okay, so it'd have to be like something like this. It'd have to be like this. It'd have to break this high, form a swing high, break, and then create a fair value gap for you to then take an entry on. Right? So this would be a run on stops, be a shift in market structure here, and then it would return back into some type of fair value gap. If it was in this type of instance like this, like look just like this, that'd be even better because you have inversion fair value gaps also supporting the idea. Right? So I hope that makes sense. That's a powerful thing with every single idea. Remember what I said a second ago also that I pointed out very clearly. This is probably a market maker sell model, and this is a second stage distribution area inside this little fractal, inside the higher time frame that we just mapped out. So this should quickly get down below if we're correct. Okay? Does it look like that was the proper mindset? Does it look like that was an actual thing that's in the chart? Does it look like it's true, what I've pointed out ahead of time, before the fact? Right? If you're thinking, looks like it, you're pretty much in line with, what's happening. And again, when does this all change? When do I pivot? When do I start thinking the opposite direction? Well, other thing, the DXY need to change and go the other way, which means DXY would go bearish, start breaking through lows. This would have to really quickly run up here. If it stays below this inversion fair value gap, I'm still trusting things, right? I'd have to see like an aggressive run higher, continuing to break PD arrays. Like this is a PD array. There's really no wick in here. There's a volume imbalance. So if we break through this high, this volume imbalance, and this order block here, plus the inversion fair value gaps, we're probably wrong, at least for the moment. So then I would not consider sells. Other than that, these consecutive up candles could potentially be a good sell because I'm assuming this is going to be a quick sudden move. A big issue I have though is we're before the New York open price. Does that mean this will not perform like I'm saying it should? No, it won't always. That rule won't always help you in terms of not trading before the open price for New York at 6:30 or 9:30 Eastern. But that's a thing with rules. Like you're gonna miss some setups. But typically, more often than not, when you're trading before the open price, you're gonna get caught up in manipulation. And then that's when you get stopped out. Then the open price comes, and then it runs in your favor, and then you're pissed off. So to do your best to try to avoid that type of scenario, you just wait. You accept the fact that you're not going to get every move. I did point out the fact that this retracement is probably going to be a quick sudden move below the lows if you're paying attention, right? So it's like what? That's like 13 and no for the setups that we've been taking the last 3 weeks at this point, which is pretty amazing, to be honest. So. All based on the things that I've discussed. All the things that we discussed today in terms of bias, it's a repeatable process. If you go look at the other videos, the other live streams, other things that I do, you'll start to pick up on the continuous building blocks that are all the same. From higher time frame analysis to getting your bias, to liquidity pools. There's a list I have of those. ICT's also mentioned it. How to navigate PD arrays, premium and discount, why that's important. The model you choose. The different breakdowns of the models, how they have variations to them, continuation variations, things like market maker models and all the other models that work on every time frame, right? There's just a vast amount of things that help you seriously push through that that barrier of inconsistency to consistency, and it's repeatable. It's not random. Nothing that I did today is out of the ordinary. It's the same stuff every single day, every day. And some of my private community students are here, and they know for a fact, right? Like they see this on a constant basis, So yeah, and then they also do things in a consistent basis like this, And every day we get better. All of us. None of us are perfect, but yeah. Look, so I said again, the drop is going to happen. I said it will happen. It's highly probable given all the things we've discussed, and it should be a quick sudden move, right? So that's a beautiful move. Look at that, right? I just got like a big loud thing. What the hell was that? Oh, appreciate you subscribing, bro. Appreciate you. Happy to have you here. Grateful. But yeah, I hope you guys get value from this. Like this, the whole market maker perspective is heavily intertwined with the things that I do. Because the one little meeting that ICT had, or call, or whatever you want to call it, where he said the one model he would use is market maker models, I had to do digging. I had to really press into it because it's so powerful. It's more than just an entry model. It's a framework. It's a validation of a bias. It's a positioning, timing tool. Like it has so many things that assist you. That of course it's got a vast list of things that you got to get used to and a good amount of practice. But doing things like this with someone that knows what they're doing, that actually applies it, that has applied it for years, and basically at this point 4 years, it's good to watch and see just how things are implemented, because then it's easier to start taking things away, and you're able to go and start applying them, or at least be on the lookout for certain things, So yeah, and again, I have a market maker model video. It's kind of like breaks down some basic information. It kind of breaks down exactly what we looked at today, right? You want to see something repeatable and how repeatable this is. Literally, the market maker sell model example that I gave in my market maker video literally is the same thing as this. It price consolidated, rallied up to a premium array on the higher time frame, gave us a smart money reversal, and then dropped lower to do the sell side of the curve. So buy side of the curve is a retracement, sell side of the curve is the expansion on the higher time frame move. In this case, bearish, right? So those are easy little way to view things right there, for at least from a 10,000 foot overview when you're thinking about it. A retracement on the higher time frame, bullish or bearish, whatever bias it is, you got to figure that out. But if it's a bearish market, any retracement on the higher time frame daily chart could be considered as a market maker sell model, the buy side of the curve, and then the drop off to continue the bias is the sell side of the market maker sell model inside of a higher time frame bearish move. Okay, I hope I didn't lose you there. But yeah, this is going to be a very fun thing to watch right now, because we should be seeing some beautiful price delivery, hopefully. We don't really have any crazy news that could interrupt us, in all honesty. Looks like, should, right? And of course, should has to be the word. You just never know. But it should have a pretty nice slide lower, given the fact that we've now switched bearish. We're in a seasonal tendency that's very heavy, generally year to year. April generally does this type of stuff, many times going into June. And then the summer months are kind of slow. And then we pick back up. And then also freaking the end of the year, we got the Christmas rally, generally, right? Sometimes. Many times. Right, so some good things to keep in your notes, so that when certain months come, you can have a reasonable anticipation of what's going to occur, and then you can use the chart to confirm or negate whether something in terms of the bias you're assuming is going to play out. Right, but yeah, we have this fair value gap here as well. Like I said, the inversion fair value gaps were going to be significant. Those levels beautifully held. We also have this order block now, so we'll see if that also holds to get us down below. So there's been 1, 2, 3 potential entries. This lower one is the lower probability one, in terms of like a low probability, not in terms of it playing out, but low probability in terms of it not retracing, right? Because it could easily retrace, come back and swoop up some stops. We are also before the open price, which is always elevating the risk because it still could manipulate before it gets over there to then do the move, which traps the best of us, right? We've all been there, where we're in a trade before the open, we take a trade, it takes us out, runs the opposite way, but then once the open price comes and it's already taken out stops, including our own, right, many times, it'll then take off into your direction that you assumed and you knew it was going to go that way, right? So again, to try to avoid that, you have to set up rules, different frameworks, different, guidelines, so you can not be put in those situations. And you don't got to be worried about missing a move. There's always a PD array somewhere. There's always something being reached for, unless it's consolidating. So there's nothing to worry about. And the models repeat constantly. Okay, so be patient. Took a quick scalp on the NQ after 5-minute candle close below the order block. Close, since it could possibly trade. Exactly, brother. Exactly. And there's nothing wrong with that, right? Because the rules that we always talk about. And that's one of the heaviest rules that taught me the harshest lessons, because I always got on the chart and then instantly wanted to get into a trade. Oh, I got on the chart. I'm on the chart. Okay, now I got to take a trade, right? Early on, that was my impulsive behavior. I was constantly trying to hurry up and get in a trade because I needed to trade right away. And that's not what needs to happen. Now I'm a whole lot more wise, not perfect, but I'm a whole lot more wise and privy to how the market likes to operate inside specific conditions. There's more experience that I have, and looking back, I can see that was the dumbest thing I could have ever done, is try to hurry up in a rush. Every time I get on the chart, every time you get on the chart or anybody else gets on the chart, that's not a signal for you to take a trade right now. Right? Like, that's just not how it works. There has to be things in alignment. And right now, you've seen what I put you guys in alignment with. And it's beautifully played out, offered multiple setups. Remember I said how this could potentially be a move as well. But that's the lower probability one in terms of us not getting a retracement. Not low probability in terms of it playing out through the lows, because I'm assuming that's going to happen. I have conviction that that's going to actually happen unless things change. But yeah, this would be the harsher entry. You'd have to accommodate a deeper stop, right? And if that's not something you would be comfortable with, guess what? That means that is not your setup. So, and technically, if that's the case, did you really miss a move if you don't take that and it takes off? No, right? Maybe you missed this upper one that was a YouTube model up here. It was a beautiful YouTube model, layered with SMT, layered with all the other things that we discussed. One thing that I noticed about this entry, it wasn't exactly in the macro that I like to see. Another rule I like to employ is my entries have to be in some form of a macro time window, because it's just the macro times are the times where price really runs away, so you don't get caught up in consolidation. It's a similar idea between that and the macros that has to do with like the between the open price rule, how when price is not hitting the open yet, taking trades before that, we have to always consider that some type of manipulation can happen. So generally just don't even take the trade. You merge that with the macros and you're already starting to minimize specific things, right? Minimize the specific issues that could take place from getting in entries too early and you're inside the manipulation, or entering inside of a position that's going to consolidate. Both of those are combated by one. For the first one, don't take an entry before the 6:30 a.m. Pacific Standard Time open, or 9:30 Eastern. And also don't take an entry unless you're inside of a macro. Yes, you will miss moves doing this type of stuff. You will miss moves if you follow a bunch of rules. But then again, if you have no rules, you have no limit to loss. You have unlimited opportunity, yes, but you'll have unlimited exposure to loss if you don't have any rules, right? Because if you don't have any rules, you don't have any risk management. If you don't have any risk management, the conversation ends, because if you don't have risk management, you're done. You won't survive. So, having rules is a lifesaver and very helpful. It's a stress reliever. It makes you realize over time that you're not going to have to worry about it, because things repeat over and over, and you're looking for specific things. And knowing what you're looking for is the one thing that most traders in the industry, even if they've been here for years, just can't solidify. They're in there trying to find a random trade because they think it's going to go higher or go lower. They don't have a specific thing like we've discussed even today. You know, what I've discussed today, if you go back to the other live streams, you'll see the same thing being talked about. The process from the higher time frame for fundamentals all the way down to the entries. So again, this is high probability, a little bit lower, but still high probability given the layered inversion fair value gaps and the overall market maker sell model potential framework here inside the larger one, inside of the bearish market. And then this is the lower probability in terms of getting in and it spooling quickly. It's also outside of the macro. Well, look at this. This was a 550 macro or 850 macro. So the last 10 minutes and the first 10 minutes of any hour, starting from this time right here at 8:50 Eastern or 5:50 Pacific Standard Time, that's the first macro you look for. If you would have used that logic, which is why I said it's probably going to work out, all the rules are in alignment, besides the fact that you're taking a trade before the open price. But nonetheless, that was easily 5 points given the market maker sell model framework. Everything layered beautifully, with one rule being out of position, which is pretty much the not taking a trade before the open. But that's the thing. There was a news event. So when there's a news event, generally before the open price, like at 8:30 Eastern time or 5:30 Pacific Standard Time, if there's a news event, generally that can be very beneficial and offer moves. But if there's no news event before the open, that's definitely a time when you don't want to take a trade. Just sit and wait, because the open range hasn't even opened yet. And there's no reason for price to be excited if there's no news. Because there was some news, we can see that it beautifully delivered price with all the other layering factors that we've discussed so far. Right? So I was the same way. Yeah. We all deal with the same stuff generally, brother. Like, you know, a lot of us deal with a lot of similar things. Some of us have more issues than others that we have to overcome. But man, discipline and being consistent with that discipline, trusting your rules, trusting the fact that things are going to repeat, and then most importantly, trusting the fact that you yourself can be trusted to follow the rules and do it correctly so you don't miss a move. That's a process in itself as well that's not talked about very much. Like, you got to literally build trust in yourself that you're going to follow the rules and you're somebody trustworthy. And the only way you do that is by telling yourself to do something and you do it continuously over and over and over, no matter what. That builds confidence in the fact that you can trust yourself, that you won't go into the market and take reckless ass trades, like with no evidence of anything. I just want to take a trade. It seems like it's going to go higher. But you have rules. If you break those rules, every time you break those rules, you're degrading the trust that you have in yourself. So the next time you get into the market or attempt to get into the market, you're going to hesitate because you're like, oh my God, what if this happens like last time where I overtrade and this and that? When it's just an avoidable thing. Make rules, be disciplined, or at least work on the discipline to follow them. And don't take any stupid trades even on a demo account, right? Don't try to wing it on a demo account. Okay? We're not there to enjoy ourselves and see what could happen, because you mess around, you'll find out. And if you mess around in a demo account, you try to find out in a live account, you're gonna, you don't want to go down that road. It's not fun, and it just extends your learning curve. It's gonna make it longer, harder, more of an issue, and it's dumb stuff. Looking back from the last 4 years, if I could go back and tell myself something, I would tell myself to chill out, right? Like, just slow down, relax, one thing at a time. We want to hurry up and get to it, but you're not going to rush getting to it quicker. Like, you're not going to be a surgeon faster than the education is going to teach you. Like, you have to sit and go through the process, because that's just the way it is. Do you want to cut someone's heart out and kill them? Like, do you want to, or do you want to be a professional, get paid big bucks and save lives? Well, that's the same perspective you want to have for this. Do you want to be an effective trader? Do you want to actually be consistent and do this properly so you can have longevity? Then you have to follow the protocols that you need to go through. All the things you have to go through mentally is more than just technicals. It's more than just technicals. It's a lot more than just technicals, actually. There's a lot of mental things that you got to go through, and you can only learn those things when you go through them, right? So, and of course that takes time. Learning how you yourself is going to react in specific scenarios, that takes time. You need to be put in those situations. Otherwise, you're not going to know. It's at face value, you'll be able to say, oh yeah, it makes sense. But in the moment, when emotions are running high, when you just took a loss or two, and you're getting the feeling of wanting to make it back, and getting mad or whatever the case may be, you're gonna see that there's a lot to learn, aside from you understanding what the market's gonna do, whether it's gonna go higher or lower. Because you can be right on bias and still get it wrong because your emotions are out of whack. It could be bullish, but you won't understand the fact that price is going higher, even though it retraces. Right? You may not trust it. It may go lower, and your mindset may be off, thinking so much doubt and lacking trust that you'll get out of the trade. But your bias was correct. That's one of those reasons why bias is not the only thing. You know what I mean? That's one of the reasons why. So it's a mixture of things. Just like how our models and our approach is a mixture of things, from different analysis with different markets, merging that together, to piecing together different concepts like premium discount, the PD arrays, timing, macros, different price structures and identification, targeting practices, right? All these things layered together to create your trading model and to turn you into the trader you're going to become. But your experiences and how you choose to develop yourself in those experiences makes you the trader you're going to become. So it's a layering effect of all these things, from your approach in the markets to how you actually think in the markets. And all that stuff is what creates you as the trader. So many things are very important to pay attention to, aside from making money. That's the least important, because if all these other things are out of whack, it's going to be impossible. Like, plain and simple, right? You can't just come in only focused on the money. You need to become a trader you need to become the person that's going to be able to effectively act in the role of a trader. And that's not just anybody. That's a person that has self-discipline. That's a person that believes in themselves unwaveringly, no matter what. That's a person that's responsible, right? That's a person that cares about themselves and the money that they make and the family that they have and the reason why they're doing this stuff. That's a person that comes into the market confident, even if you took a loss, while still managing to not overtrade and over leverage, not ever getting too high, not ever getting too low. Having that balancing effect and mastering that. It's a laundry list of things. And that's why it's difficult. That's why people give up. Because it's not worth giving up on. I'll tell you that right away, even though it's a lot of work. Being broke is a lot of work. Stressing out about money is a lot of work. Doing something you hate is a lot of work, right? Having to wonder what it could have been like is a lot of work later on. Having that regret that you didn't try, or at least give it your best shot, that's a lot of work. And you can't fix that once that's arrived. So think about it. If you like this stuff and this is something you truly want to do, if you see yourself doing this and being a trader, and you're willing to make the sacrifices, you should never, ever, even through hardships, think that quitting is an option. Because I'll tell you one thing, 4 years ago, quitting has never been an option, even to this very day. I've been through a whole lot of chaos, and quitting is not an option. I could care less what happens. It's just not an option, So you definitely want to adopt that mindset. Oh, what's up, brother? Ryan, yo. Appreciate you hopping on, man. Yeah, man, I'd be trying to just give whatever I feel like can be helpful, brother. You know the vibes. And I hope you're doing well too, brother. God bless. God bless you too. Praise the Most High, everybody. Without him, I definitely wouldn't be able to do this. Guaranteed, because, Very easy in many cases for people to quit on themselves. But that's why you have to make this, like I've said before, you have to make this mean something to you and be grounded in something like, your beliefs, maintain positivity, always don't beat yourself up, right? This is always talked about from ICT, which is a hugely important thing. It's even in negative scenarios, when you take a loss, that's not a lose. You either win or you learn. There's no losses. Okay? You either win or you learn, or you're basically paying to get the right information. You should never have losing. Oh, I'm a loser. All these things that are derogatory to you and your character and your persona as a trader. You should remove it all from your vocabulary, 100% of the time. Because if you try to pile on the negativity and beat yourself up like a horrible critic, it's not positive. You can't make a positive situation out of a negative situation by looking at it negatively. That it's not like in high school where two negatives create a positive. It's just not how this isn't algebra. Okay, like you gotta layer positivity. Mixed with study, mixed with dedication and your why, and all these different things. And be gentle with yourself. This is a hard thing. This isn't like one of those, it's not like sports where you can go in there, start getting aggressive with yourself all the time. Because, a lot of times that's in a negative light, and for some people, maybe that works. But yeah, that doesn't work. That doesn't work for me. And many traders I know, that definitely doesn't work for them. You can't sit here beating yourself up thinking that that's going to make you improve and make you stronger. Because this is a psychological thing. It's not a physical thing. If it was a physical thing, it'd be different. But this is a psychological thing, right? So again, how we discussed the fact that this was an idea which I didn't hop on quick enough, but we had the bias. It was given well ahead of time, and the reasons why, and all these levels have been given. We also talked about this entry, which also delivered 5 points, even if you just targeted this low. And then I did say that this entry here would have risked a potential retracement, right? So it was lower probability in terms of price not retracing, but still may, in fact, reach down below here. But it's heading into the open price. Excuse me. So this retracement was spoken about, right? We said that this could potentially occur. So with that being the case, that's showing the logic that we discussed about this potential entry at this order block here, how that was lower probability in terms of us getting a smooth run. It's also outside, it was kind of inside of the macro, but the actual entry for this macro time here was this specific move here that was given before the fact, right? So we now want to observe what occurs here because we've now set equal lows. We're also inside the higher time frame bearishness, right? So all the things that we've discussed, we don't want to see this midpoint get violated any further. Seeing it like this is totally fine. If it wants to reach down and fill out the rest of that, I guess that's permissible. I'd prefer it not to do that, right? I'd like to see it in a perfect world, run and give us that second stage distribution from this weekly market maker buy model that we've had outlined for the last week or so, or before a week. When it was down here, I was telling my private community we're going to probably go higher, and to watch that, and it basically did that. Once it got above this high, there you go. So I'm anticipating that this, because it's a second stage distribution, is potentially that second stage distribution area in this market maker buy model, that this shouldn't want to have a deep retracement. Generally, when it's at that point, they're not going to give you deep retracements in a second stage distribution if you're actually correct. If it is going to actually, in fact, play out as that framework, in this case, the market maker buy model, we should not have to anticipate it come down below here, right, and break through it. We want to see that respected and quickly give us a fast, low resistance style move, right? And of course, since this is the weekly chart, that doesn't mean it's going to be one candle going higher. It could slowly reach up into there and then eventually blast through in one punch. We'd like to see it go quickly like that, right? It doesn't have to, but that's what we like to anticipate when we see this type of framework. So, the faster the better, right? Because that is what this signature generally does in the second stage distribution. And then again, just to review, we see the T-bonds going lower. We see the yields going higher. That promotes a bullish DXY. Switch over to the DXY. It's retracing. Looks like it wants to get in line with that potential idea. It's been the start of the week, which basically has dropped down lower into a discount array, which could be the area where it's setting up its smart money reversal to go higher, setting the low of the week. And then you take that idea, transpose it to the indices, right? And prices basically ran higher, hit a premium array, and this may be where its smart money reversal will form for its market maker sell model to continue us going lower, to then maybe reach down below here, or this previous week's low, the wick midpoint, the quarter points of those wicks, this previous day's low here. These are all targets on its way down to the potential further range target, which is this low. This fair value gap and this low. If bearishness continues, right, which I'm assuming, given all the things that we've discussed that layer on top of each other, should be the case. And again, and I called this market maker buy model also in my private community. But same logic, right? Consolidation, right? There was SMT at the highs, and then price ended up shifting market structure. Okay, if we go to the daily, we could see that there was first stage distribution here at the accumulation, second stage accumulation. Price broke through that, had a retracement here, right? So here was the second stage distribution, and then it just aggressively purged out the lows on its way to the fair value gap. That was also, this fair value gap was outlined on one of the recent live streams as well. So you guys were also informed about this if you did watch those. Pays to pay attention, right? So definitely hop on when you get a chance, or watch the replays at the very least. I know they're long, but there's always going to be a ton of things that are going to be helpful. So so we're now seeing price turn. Let's go observe what's happening with the other ones. So we're going to want to monitor. This does have equal highs here, so we're going to monitor and see what happens if things change after the open. This could just be very manipulative. Manipulative. It could just be, again, just retracing to stop out people that were winning to then continue going lower, but we'll see. I'm favoring us to potentially continue going lower given the DXY, unless of course this just wants to use today to hold, right? We'll see fairly quickly after this open price, or after the open, going into the silver bullet, all the way up until 8 o'clock. If something shows before that, if we get back in line, or if it just consolidates and doesn't really move anywhere, then that'll show you that you need to just relax and wait, right? Because we look for high probability, fast-paced things. This was high probability. This sell here was high probability. But now if it starts bouncing around in a range, and then say DXY also wants to be held in a range, then it's not really something that you want to push too hard on, because we do have a couple more days that could end up being the times when more energy comes if today does not promote that idea. That's why you got to be patient. That's why you don't overtrade. That's why you make sure that you're keeping tabs on actual things that are in the market that are important, like the current state. Is it in consolidation? What are intermarket relationships showing you, right? Are as many assets being held? Are the interest rate markets being held? The interest rate market, in this case, this is in a consolidation. So if there's some shaky price action here, right? We've slowed down on the interest rates. They're consolidating. We would like to see it move quickly higher. But if these consolidate, a lot of times these interest rate markets will give you signals as far as why something is not moving in the DXY or in the indices or the other currencies that are related to the US dollar. Because the interest rate markets are that important. They are the bloodline of in terms of the reasoning as far as why things go particular directions. And then, of course, if like U.S. assets are in consolidation, but the interest rate markets are running towards this particular direction, that can also help assist you in understanding what direction that consolidation could break out of, right? So in this case, if this breaks lower and we're still in consolidation on the indices, I basically would feel like we're most likely to continue going lower, because if this goes lower here and that promotes this to go higher, then DXY should go higher, and then that in turn would send these lower. All right, now we have a skewed relationship here. Going into the open, we have the NASDAQ rallying. We have the other indices. Oh shoot, where did it go? We have the other indices basically creating the lower high here for the S&P. We have the NASDAQ creating the higher high. So again, because NASDAQ made the higher high, it is the stronger of the three. So if we're going to look to sell, we're not looking to sell in the NASDAQ, because you want to sell something that has weakness, more weakness between the correlated assets. So when you're observing S&T in a particular idea you're trying to find a idea on, and the correlated assets, the one that has the higher high in a bearish market is going to be the stronger one that has probably the less protracted move. But if you look at something like the S&P that created the lower high on two levels inside the bearish overall narrative that, again, hasn't changed, this one should give you the cleaner move, right? Technically, right? So yeah, remember what I said. So if price breaks through this high and we're looking to enter, we would like to see a swing high break. Then we'd like to see a shift in market structure and then a return back to a fair value gap to enter a continuation variation of the YouTube model, right? So if this is going to continue to play out and we're correct, one of these fair value gaps should be used. Whichever one you decide to engage, whatever ideas you choose to participate in are not my responsibility. Just making that clear, okay? I'm not here to promote you to get into a trade. I'm not trying to turn you into a signal junkie. Just take the information that's shared with you and you do what you will with it, right? I don't condone anything. Just like it says on the screen, trading involves risk. So I just want to make that very clear. We are trading futures, so it is illegal for me to act as a financial advisor, and that is something I am not, right? I just understand the markets and showcase that skill set to you, and you can do what you will with that information, okay? So, yeah, so I'm basically going to observe this. I would like for it to get into this fair value gap, and I'd like to see the other indices give us some nice aggressive energy lower. We do have now SMT at the highs, and then we also like the highs here, but I don't really like the SMT at the lows here, right? Because now we got SMT at the lows too, I believe, right here. So when there's SMT like that, you have to use the DXY. We also have SMT here as well, bullish. So you have bearish and bullish SMT at these highs. We also have it at these highs. So again, the market is very skewed at the current moment, but a tip in terms of using SMT, for one, you always still want to pay attention to the higher time frame. Like, what is it doing on the higher time frame? Because that's going to hold precedence over whatever's happening on this 3-minute chart. But when you have two sides of SMT, you have to then go over to the DXY and go see, okay, so there's SMT at the highs, SMT at the lows. Well, what is the DXY telling me? Because the DXY will validate or invalidate a particular SMT at a particular moment, and it'll assist you, right? Especially when you're in line with the higher time frame bias as well, and you have these layering factors. When you're trying to use SMT, a lot of people get burned because they'll see 2 or 3 at a time, and they won't know what the hell to do. What do you trust? Well, always revert back to what your higher time frame bias is, because things don't change every 5 seconds, okay? But then to validate the SMT, which one should or shouldn't hold, you want to observe of course, the interest rate markets in alignment with what the DXY is doing, because once you figure out what those are doing, that'll tell you which SMT is going to be useful, especially if your bias is going to be respected as well. That's just a very, very important tip. All right, so price currently at the moment, we are now inside the opening range. So you just want to observe for the next 30 minutes, since there's not really much. That idea there would have been a failure, which is why I didn't say anything about getting in. But this would have been a failure. It would have been a loss. So now the perfectness has now come to an end, right? So it'd be like 12-1 if I was to try to send that out as an entry. But nonetheless, because this is the case, this is telling us now we would have to pause. Wait, what is occurring? What is going to happen, right? What do I favor? I favor us looking for potential sell ideas. We still have very obvious sell side liquidity. We have this. Nothing has changed again on the higher time frame. So now with price doing this, we just started the open of the New York session. So again, we're inside the manipulation, as we discussed when we were talking about the scenario over here. Why this one would have been a lower probability for price not to retrace. And of course, right as I say that and the open comes, it does exactly what I gave you a risk disclosure about, right? It would have stopped us out, right? But again, it did do something that I said we should look for if we were going to want to participate in something. Ideally, if this would have played out, this is what you want to look for in terms of the continuation variation of any model you're trying to use. In this case, specifically for the YouTube model, right? We'd like to see if it printed here, that was one YouTube model entry that was delivered. If we're trying to get back in line with that same direction using the YouTube model, we'd like to see another run on stops. That's buy side being taken. We'd like to see a swing low broken. That's a swing low swept, right? And then we'd like to see a return to a fair value gap. And then that would be the continuation variation of the YouTube model. So you don't have to worry about missing the one that you initially saw. You just wait. If your bias is correct, it should present you with another opportunity within the rules. You just have to wait for it to give you those rules again, right? You can't get pulled in too often. If you're just trading the YouTube model and that's the one thing you've decided on, you don't want to try to take any other things outside of that. And then, of course, once you gain more experience, you'll start to get more comfortable with different entries, like this one that I pointed out that played out. And then, this one that we ended up missing. Oh, and then this one too. I didn't even see that fair value gap. This was also an entry here. This would be the most high probability one in this sell, aside from this one, as a secondary option, right? Just for completeness sake. So yeah, let's continue to observe, what is potentially going to occur here on the DXY. We are in no rush, as it should be. Should never be in a rush. I do want to see this gap on the daily chart get attacked. That's been, my objective initially. Then we also have this high here, which is basically the previous day's high. So I'm going to outline that. It's previous day's high. Oh, shoot. 1 second. Yeah, if y'all got any questions, definitely leave them in the comments. I'll be happy to answer those questions while we wait. But yeah, so yeah, price, we could see how price is retraced on this candle. It's kind of like indecisive so far. We have dropped so far for the week. Again, that is completely in line with what I'm trying to see happen if we go bullish. Okay, and if we can take a look at these other time frames, this consolidation here could act as an original consolidation. This drop here can act as a smart money reversal. This was a market maker sell model here. It was a very sloppy one, but now I'm considering this as a potential situation. With this consolidation, it could potentially act as a target point, because remember what I said earlier about the how price will consolidate, pretty much like this example here with the indices, right? How the S&P hit a low, then it rallied up in a higher time frame bearish retracement to potentially give us a market maker sell model. Well, if we come over here to the DXY, when we drop down to the lower time frame inside this higher time frame weekly potential market maker buy model, those little retracements like this inside this larger price swing, they also present market maker models. And how do you frame it? Well, you get a place where it consolidated and ran away from. You get a logical PD array that it's going to reach down into, in this case, reach down into to go higher. Frame that lower price move as the sell side of the curve, or assume, like go into it assuming that. And then, of course, if it tries to rally aggressively higher, you start anticipating that right side of it being the buy side of the curve. And then you just frame that out. You go into the market every day trying to pull out examples of that every day. And if you do that, and you're trying to learn the market maker buy and sell models, you're going to seriously find some serious gems in that, and some massive leaps in your understanding. Because once I learned the market maker models, everything changed, literally. That's why I start the market maker video I made with, this changed everything once I figured that out, because it did. From navigation to entry to phasing out my entries and where I do the best entries at, right? Where the fastest moves are, where I could probably get caught up in. It's all around really, really helpful. Okay, so yeah, we are, again, like I said, inside the opening range here. So let me go throw on the regular trading hours gap. Okay, I don't think that's anything. So this is 6:30. So this is our regular trading hours gap. So because price is now opened at a premium, price is basically opened at a premium, it's reaching further into the daily fair value gap, right? So it is permissible for this to come all the way up into the midpoint of that. But again, we don't want to see too much of that getting disrespected, but it is permissible for it to do what it's doing here, right? Of course, we wanted to see it go lower, so it's not 100% what we wanted to see right away. But there was three opportunities that were offered, right? We pointed out two of them. One was a little bit late because the freaking stream cut off, of course. And then, of course, we had this one that was also called out well ahead of time with these inversion fair value gaps. And again, if one of these entries doesn't make sense to you, if one of them is like, I probably wouldn't feel safe, then just disregard the fact that that's something I'm saying was an opportunity, or take it as an example to go study, right? And try to figure out how you can start to trust that further, based on what's been discussed and what you've learned and what you will learn eventually in terms of how price respects these PD arrays as it prints. Right, so let me just take that off. So yeah, we got this regular trading hours gap down here. We have this SMT, so hopefully this SMT holds at this high, because that's basically helping assist us in trusting that we will still see further lower prices. I'm I'm watching how we tag the event horizon, suggesting that the next target is previous new week opening gap, which aligns exactly. Great observation, Mark. Good job. Wonderful observation. Yeah. Oh, speaking of new week opening gaps, for those of you that don't mark off new week opening gaps, you really should, at least at a minimum, if you don't like it being on your chart, you should at a minimum be writing those down on a piece of paper from the last 3 to 4 months, because price will always come back and use them when it's close to them, either as a target or as a place of fair value, which will basically pull price into it, right? So you definitely don't want to disregard those. Same with regular trading hours gaps. You use the last 3 days regular trading hours gaps. Basically, that's the time limit for those to be valid. But new week opening gaps are valid constantly for like the last 4 months, sometimes even further than that, based on what ICT has basically talked about. And if you go back and study it, I mean, it's insane. And to make your regular trading hours gaps easy as hell to observe, you want to go and grab this indicator. The weekend Saturday Sunday separator. Just get one that highlights Sunday and Saturday and Sunday, because then you can do this, right? You can have things. Oh, whoops. What the hell is the thing? So then you can do things like what you see on my chart, right? You have each week outlined. So not only can you identify the new week opening gaps very easily, you can also figure out each week's range and go in there and study weekly ranges quickly, instead of having to find out, oh, where's Monday, who cares? Like, get the indicator to help you map things